It appears as if what we are seeing in ZCash, in ZEC, is just a repetition of history. We have seen multiple pumps and subsequent dumps, and while this is the largest of the pumps, it seems like we are at a turnaround now. But is this actually true? Is it too late to buy into ZCash now? Because here, this seems to be the most straightforward explanation. This is a long-term chart of market cap. We have seen several pump and dumps, and while every pump was larger than the prior one, it seems like we are getting closer and closer to the top. Unfortunately, in crypto, things aren't necessarily that easy. This here is the long-term US dollar chart of ZCash. The bottoms align pretty well, and maybe the tops will align as well. To a degree, they did in the past. Is there really only another 30% upside for a potential risk of a crash of 95%? I don't think we can look at the situation this way, because when we compare ZCash to the rest of the altcoin market, there has been a true turnaround. Have a look at this. This is what most people ignore. This is ZCash relative to Bitcoin, and this tended to underperform quite consistently up until the middle of last year. Since then, ZCash was able to keep pace with Bitcoin. And now we have seen a relative outperformance of a magnitude we've never had in the past. It looks like a lot of that rally is due to short-term speculation via perpetual futures, via levered bets on the price. The ZCash spot market is not that liquid. We only had 467 million worth of trading volume on Binance on the spot market. But compare this with the perpetual futures market. We had more than 2 billion worth of trading volume. So really, the price discovery happens on the perpetual futures. It does not happen on the spot market. Most value gets moved on the levered bets on the price, and then arbitrage bots trade this against the spot market. And so really, we just have to focus on the perpetual futures market. What's going on with the levered bets on the ZCash price? One thing we can note is that the trading volume is way higher than it had ever been in prior cycle tops. When ZCash was at around $300 in the past, the trading volume was only close to 500 million. This time it's close to 2.5 or 3 billion. And it's not just the trading volume, it's the aggregate of the positional bets that is at an all-time high, and that has grown a lot. There's a lot of speculation on the ZCash price right now, much more than in the past. Just look at this. At the peak of prior price rallies, we were at maximum open interest of around 100 million. This is a bit over 4 years ago. This time the open interest is at 500 million. So there's much more speculation around ZCash now. My impression is that over time, more and more people were betting on falling prices of ZCash because of the continued underperformance. And then came the surprise. Then came a cascaded short squeeze. Once the price versus Bitcoin stabilized and it wasn't that clear anymore that the token underperforms, that's when the market makers started to short squeeze. That's when they bought up on the spot market and liquidated all of those shorts. What we see over here, that's the open interest weighted funding rate. So when this is red, there are more shorts than longs. So more perpetual futures traders are betting on falling prices than on rising prices. When this is green, then the market as a whole tends to be rather bullish. Whenever this turns red, this becomes very attractive for the market makers to buy up the token on the spot market, push up the price, and then squeeze out all those short traders. So the loss of the people that bet on falling prices becomes the gain of the market makers that push up the price. It's a brutal player versus player market, and still up to this day we see more open interest on the short side. It costs money to bet on falling prices. It's still profitable for the market makers to buy the token. And so that might explain why this rally lasts for quite a while. Have a look at the hourly chart. Again, ZCash versus Bitcoin. The rally started 9 days ago. We have so far outperformed by 870%. And every retracement that then invited new short interest was used for squeezing the price even higher. But still, we have to note that the market cap with every short squeeze is getting higher as well. So it does become more and more expensive for the market makers to push the price. At one point, price manipulation won't be profitable anymore, and we are likely going to see the turnaround. Will this happen over here? Who knows? It's probably not going to be that predictable. The best indication is probably to go to CoinGlass, that's where this chart is from, and check the funding rate. Once this normalizes for a while, that's when the market is in equilibrium again and when there won't be any more short squeezes. ZCash has stabilized versus Bitcoin. ZCash has even now long-term outperformed versus the remaining altcoin market. This is ZCash divided by the others market cap. So while we are currently at elevated prices and we might come down after the short squeeze has finished, very long term, I don't think we will go back to this underperforming chart. ZCash has much less inflation now than it used to have. And when the supply of an asset doesn't grow as consistently anymore, it can potentially do better than the rest of the alts. So the asset has matured. I do not think that we will see continued underperformance of that magnitude going forward. But there is a chance after the short squeeze has finished that we will see a retracement of that price manipulation, and then we are likely going to continue to trade in line with the rest of the altcoin market. What I find fascinating is that the development within the altcoin market seems to move contrary to what's happening in Bitcoin. So in Bitcoin tends to do better, then the altcoins are rather weak. When the altcoins tend to do better, then Bitcoin tends to be weak. What we're seeing over here, that's the others dominance. So how much of all of crypto is in the altcoins that are not in the top 10 in terms of market cap? So it's a percent range that tends to peak out at around 20%. It's currently at 7%. Now have a look at the following. Let's have a look at the peaks and the bottoms. Let's also see where there's a potential support. That's maybe here. And let's now compare this with the Bitcoin dominance. So how much of all of crypto is currently in Bitcoin? Whenever the others dominance is peaking, the Bitcoin dominance tends to be low. Whenever the others dominance is bottoming, the Bitcoin dominance tends to be high. Here's another such peak where the Bitcoin dominance is high and the others dominance is low. So there seems to be a direct inverse correlation. And since the beginning of 2022, the altcoins tend to underperform and Bitcoin tends to outperform. And Bitcoin tends to trade in a range. It tends to peak at a dominance of 73%. So once Bitcoin is 73% of all of crypto, the altcoins historically were very cheap. The problem for altcoins right now is that the others dominance still continues to go down and Bitcoin dominance still tends to go up. And while the others dominance didn't necessarily always bottom at the exact same level, it tended to be somewhere around 5 to 6%. And currently we are at 7% dominance. And again, Bitcoin dominance has way more room to go until the altcoins become historically cheap again. So really, it does make sense to be selective when purchasing alts. It's maybe not the best time to have a diversified altcoin portfolio because most of them are likely going to be worse medium-term performers. What we see over here is the others market cap. So how much capital is currently in the altcoins that are not in the top 10? We're not looking at the others dominance, but at the others market cap. And the altcoins do have a hard time getting above 500 billion market cap in aggregate. Here's a similar metric. This is total 3ES. So that's all the altcoins that are not Bitcoin and Ethereum, and we also exclude the stablecoin. This metric has a hard time going above 1 trillion. There is a fundamental problem though with all of those metrics. So with the others dominance, with the others market cap, with the total 3ES market cap, the problem is that market caps are not a good indication of where prices are going. And prices in the end determine our performance as an investor. Let me show you what I mean. Here as a representative example, we've got WorldCoin. WorldCoin tends to peak at higher highs in its market cap over the very long term. Yes, we've got our volatility. Currently, we tend to dip a little bit, but in general, over time, the market cap is going up. Now compare this with the long-term price chart. That's very different, right? It's not going up from peak to peak. The peaks are lower over time. And the reason for that is token inflation. It's the number of WLD or WorldCoin tokens that get issued over time. The supply grew by 8x over the span of a bit over 2 years. That's of course very extreme, but in general, we tend to see most altcoins expanding their supply quicker than Bitcoin or Ethereum or Solana over time. The effect is very drastic. So every week we see more than 1 billion worth of unlocks in the altcoin market. And that's just for the altcoins that are tracked here on this website, Tokenomics.ai. And so I believe this is where the market inefficiency is, where we can actually exploit that inefficiency and make money. Because it seems to be obvious that something like WorldCoin should go down in price over time. It might not go down in market cap, but it will go down in price if the supply expands this way. Yet, the vast majority of traders does not agree. Have a look at this. This is the perpetual futures funding rate. So with perpetual futures, we are betting on a price. We are not buying the asset, we are betting on the price to go in either direction, to the long side, so it goes up, or to the short side, it goes down. And because the funding rate is positive most of the time, most traders on the perpetual futures market are betting on WorldCoin going up long term. They're also betting on it going up right now. Again, despite the supply expansion, despite what history has already told us. Isn't that interesting? Most perp traders got wrecked because of the token inflation. Or in other words, the token inflation is not properly priced into the funding rate. And so really, the game should not necessarily be to try to find the next small altcoin that does another 10 or 100x. Here's the performance of the smaller altcoins in the last year. Most of them went down. Yes, the larger altcoins did better. So here's the performance of the top 100, but still, even they, in aggregate, went up only by 43% in the last year. While at the same time, Bitcoin went up by 71%. Ethereum went up by 69%. So even the biggest of the altcoins aren't doing great. The smaller altcoins do even worse. Have a look at this. This is Hyperliquid. This is the funding rate of WorldCoin right now. It's 11%. The longs have to pay the shorts 11% per annum to bet on rising prices. In other words, when we bet on falling prices of something like WorldCoin, we are even getting paid 11% per annum. And then we are making money on top of that because of the long-term underperformance. This is the WorldCoin price relative to Bitcoin over the long term. It went down by more than 90%. But now imagine we are flipping this around. We are betting on falling prices of highly inflating altcoins. At the same time, we bet on rising prices of Bitcoin, Ethereum, or Solana. So instead of having this relative performance, we are getting this relative performance. Isn't that much more attractive than even just buying Bitcoin itself? This is a performance of 900%. Bitcoin during the same time period made a performance of 289%. So there's clearly alpha in a strategy like this. There's also volatility, like we see over here, but this is a quote-unquote buying opportunity, right? We double down on being even more long Bitcoin and even more short WorldCoin. If you, of course, believe that long-term the tokenomics will prevail, which they have over years. And again, this is just an example. Many altcoins work like this. The overall altcoin market sees massive unlocks every single week. And the reason why those unlocks exist is because the venture capitalists, they want to pull out their capital. The team wants to pull out capital. The insiders, the KOLs, etc., they want to pull out the capital. They are all dumping on the retail investor, and they are dumping at a very quick rate. That is very harmful for the altcoin market. That's why we see this performance across the board. I'm following this kind of strategy already for 4 years. In the early days, it was with borrowing and lending platforms like Aave. Nowadays, it's with perpetual futures. And this is my long-term performance here. So this is a monthly chart. It shows the last 4 years. Had I just dollar cost average into Bitcoin, I would have gotten this return here at this light gray line. But because I also bet on falling altcoins over time, I got long-term outperformance. And this is really what crypto should all be about. It's about the constant alpha. It's not about finding the 1 or 2 lucky moonshots. We want to simply compound our capital reliably over time. I have made many videos on the topic, but you don't have to watch all of those videos. You can simply stick with 3 of them. The first one is over here, using perpetual futures to bet on relative valuations. Then this one over here, risk management with relative valuation bets. Very important. People that didn't have this in place, they got wrecked in the recent crypto shakeout, which was, by the way, one of our most profitable days. Everybody has lost their money, but we had our risk management properly in place. And one part of that risk management is, of course, also setting effective stop losses. So that's video number 3. In total, all 3 of those videos combined is roughly 1 hour of content. Once you've watched that content and you've joined the community, I will share my favorite trade with you. If you do not make money with that trade after opening it and after holding it for 1 month, then I'll refund the premium membership fees to you. So really, you are not risking those $125 per month. If you do not like premium, if you do not make money with that trade that I will send you after joining, then I will just send that money back, no questions asked. A link to premium will pop up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium.